Welcome back to the channel, Crypto Trend Trader with an update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So here we have our Bitcoin chart. I'm looking at the weekly on Coinbase right now, and I've got the moving averages pulled up as well as the Jewel Thief and TJD, TD MACD. And we're on the weekly, and essentially what I want to discuss in this video is some people had asked me, or it's kind of been going around like, obviously I'm still a little bit skeptical of this, but it's starting to look better by the day, obviously, that we may have entered, a new bull run and be headed into like a, new bull market, potentially with new highs and, crazy gains. But people had asked me, what are my like determining factors? How do I decide if we're officially in a bull run? And there's a lot of different ways people can do it. There's a lot of different ways that I do it, but I have like a few key signals on longer time frames. So like for instance, the weekly right now, what's going on right now is essentially looking at the weekly scale. We want to take out this high right here on a weekly close, which is about to happen. If we closed right now, if it was Sunday night and we were getting ready to close right now, we would have taken out this high on a confirmed candle close, and I would expect continuation and to threaten the previous high over here. So that's one of the steps. The next step is the cross between the 10 above the 21, and then price above obviously the 10 and the 21 as well, and that's going to give us that 10-21 cross on the weekly time scale is going to confirm that we're in an uptrend and that it's not just like basically a fake out. So when we get our close here again, we'll have closed this and confirmed that. So again, that's another reason why this close is so important. And then those are like two of the primary reasons or like ways you would tell. But technically what you would need to see is a higher low, which this is our higher low. I mean, we can confirm that at this point in time. That's a higher low. And then we would need to see a higher high. So we actually need to take out technically on a confirmed candle close, we need to technically take out 11,585 before we can call this officially a bull market, and then we could potentially be like testing our all-time highs of $20,000. But as of now, and this sounds crazy, and I know to people it's like, oh man, you're gonna wait and miss all those gains and this, that, and the other. But the fact of the matter is that this is the actual way that you determine 100%, in with your capital in a market because you're in a bull market. And the reason that's so important, everybody gets like distracted because they're thinking about Bitcoin and everything and how we've been like kind of bouncing around here and oscillating. Even on the weekly, we haven't technically been in a bull market for years now. And the reason that's so important is you have things like the stock market that's been in a bull market for like technically like 20 years. You know what I mean? Or I mean, looking at the chart, obviously it could be different depending on time frame and everything. But essentially, you get my point is that we're looking at one single asset here, and it seems like, oh, we're going to wait till we get all the way up to 20,000 before we say we're in a bull market. But yes, technically taking out the all-time high and making new highs is like the final determining factor for if you're in a bull market. But now, obviously, we're not going to wait until then to put capital in the market. So a lot of people will have like 4 stages, and at each one of those stages they'll put like 25% of their capital into the market, as long as everything is like looking bullish, or they'll look for a pullback place to buy and invest that capital, you know what I mean? So you're not immediately taking drawdown. But essentially that's what we're looking for at this point in time is, we're about to get this cross, we're about to take out this micro swing high inside of here, and then potentially I think we'll threaten that next 10-4, 10-5 range, and then that like 11-6 range, and then we'll just keep going from there. And at each area, this has been a very constructive move up. You can't really tell on the weekly, but if you go to the daily time frame, we've been continually moving up, retesting, finding support, moving up, retesting, finding support, finding support, finding support. So I would expect us to continue doing that, and that's constructive growth. So even though it seems like we're going up fast, it's been constructive. It's not just like one giant candle like this. This is what I get worried about. This is constructive. But now what you have to look about is like, look at is a lot of times you'll see the inverse. You'll see like a stair step down and then an elevator up and then a stair step down. And now look, we've essentially reversed now. So you'll start seeing the stair step up, then the elevator down, then the stair step up, than the elevator down. And that's why it's so important that we keep our eyes peeled for, essentially like where we're going to find support at, and how this market is switching around, and how the trend is switching around. And like, although you can trade on different time frames, the most important thing in this channel is this is Crypto Trend Trader channel. So we're looking at the long-term overall macro trend of the market. And on a monthly time frame, Bitcoin is bullish, and we definitely, at this point in time, we can come back and say, okay, it's confirmed. We came down, we found support on the 50 month, we came back up, we found support on the 21 month, and now we came back up, we're above the 10, and we're moving to the upside. Everything is sloped positively. And according to the SAR, we're in an uptrend. So on the monthly, Bitcoin is definitely in an uptrend. But you couldn't have, if you would have said, okay, Bitcoin's in an uptrend all the way back from December 17th, you would have been like, okay, we're in an uptrend. So, or December 2017, I'm sorry. All the way till, January 2019. So that's a long time to just be saying, okay, we're in an uptrend, so I'm going to continue on here. And then if you said right here, okay, we're officially in a downtrend now because we got the cross on the monthly, like that's too long of a time frame to be reacting to be trading on. So that's why I sort of like skip past the overall trend on that one. Now, if you're looking at it from a weekly standpoint, one of the entry signals here is when we get the cross right there, which was at that $5,200 range. That's that entrance of like a long-term time frame, uptrend. And then same thing here. We defended the cross there, but then when we got the cross here, that's saying essentially we're in a downtrend, and you would basically sell here, and that's where you get like that capitulation dump. And that's what, it's hard to say which is the catalyst for the other, but essentially you can see typically in price action how they respond. And now here we are at the weekly, and we're getting that cross over here. You could say that here, like the big movements were in response to the cross happening down. So now the big movements can happen in response to the cross happening up. But we could easily get another powerful candle up to here, sell off and come back down below this, and then get the cross straight back over and reject it, and it was a big fake out. That's why I say that you have to be skeptical, and you should be entering like periodically with your capital. Like, you shouldn't just be saying like a light switch, okay, it's on, we're in a bull market, and you turn it on and you're 100% all in now, like leverage. No, you should step into it like anything. And yes, you will potentially lose out on some gains along the way, because you could have just entered all of it at 3,500 and now you're just stepping in as we confirm. But the problem is then is that you're risking so much more. As where with this, you're essentially not risking nearly as much of your capital, because you're stepping in and you're already having gotten gains along the way, and it becomes less and less risky as a trade over time as like you get multiple confirmations. So like one confirmation is good, and you might be like, okay, I'm going to put in 10%. But once you have 2 or 3 or 5 is when you start saying, okay, I'm risk on this asset, like long term, looking for like months or years of potential like positive price action. And if something happens in the meantime, that's fine. We're active traders and active investors, so we can make changes along the way if we have to, but we don't want to be flip-flopping every day like a lot of other people are. And that's what this is about. That's what this channel is about. This is about trending trades, long-term gains, and like positive investments. And now we may take some trades along the way inside of these long trending trades, but the point is that we're trading with the trend. And now as we can confirm this into a weekly uptrend, we can potentially start taking like long trades, and then every time we get a dip now, we're trying to take a buy, and then we're making gains on the way up. And then when it sells off again, we're investing more as it sells off. As we're in here, every time we're selling off, and then we get the pop up. Instead of buying the bottom necessarily on the way down, you're trying to sell the top on the bounces, because the price action is continually taking out the lows, and that makes it an external retracement. And now that's what we're looking for right here, is that external retracement. We came down here and sold off. So this is still internal until we take out this right here, and that's why that's so important. That's how you confirm that the trend has flipped over. Are we getting a total, when it's all said and done, is price action ending up positive or negative? And if you go from here up until right now, if we were to close, we could say that price action is now positive. We took out the high from before, we sold off, we took out that high, so now price action is positive. So now we're on an external retracement from this high here. So now what we do is we look for the next like clear swing high on the time frame we're looking at, and now we look at the internal retracement of this, and then we look for potential reverse points of this, and then when we take that one out, that's it. We've essentially made it back to the top, and then we would go back to the 20,000 swing high, and then we're looking for our retracements from there. And that's why it's so important, is because we essentially reversed off the 618 of this move right here. That was the 618 retracement of this down. So that was the internal 618 of the 20,000 high was here. If this was going to continue to be a bear market, what we would expect to happen is the 618 internal retracement of this wave down here. So we would look for this to come back up to the 618 and then sell back off and then potentially go down to a new low. But that's why taking out this swing high is so important, because then we can go to the next relevant swing high, which is this one here. So, and that's why I say that you don't really know, confirm that you're in a bull market until a blue sky breakout, when you take out the previous all-time high. And there's lots of different ways you can do it, and that's not necessarily saying you don't put any money in until we take out 20,000, but in all actuality, depending on what your trading strategy is, those are the ways that you confirm, essentially based on moving averages, based on like resistance, support, previous highs and swings, and then like Fibonacci retracements. That's how you take, essentially identify if you're in a long-term bull market, long-term bear market, shorter term uptrend or bull trend, or shorter term, bear trend or downtrend. So there we have it. There's a little technical analysis. We're still at a crucial point in the market here, and like I said, we're looking for that close, because it's not unrealistic to think that we would find that resistance here at the breakdown point, retest it, failed, and come down and put in a higher low, and then move up and get this inverted head and shoulders, and then take this out, and then again start focusing on this swing, or potentially get that rejection here and come back down and put in a new low off of here and come down and find support again on the 200 moving averages, and then finally get the potential move up, or even break through them and get a bounce, fake out, and then sell back to a new low. I mean, who knows what's going to happen? At this point in time, that's all very far in the future, but we're very close and we're very focused on what's going on right now. And this little bit of price action inside of here again is very important, but it's not worth the risk to reward ratio of essentially being at that crucial support. You can manage your buys and sells, like your longs and short trades, off of this support, and this is, or resistance, depending how you want to look at it. And this is a very good place to take longs and shorts if you know what you're doing. But at this point in time, you have to realize that we are also at the high end of this range. We're at the top of essentially what we would expect this move to be, based on Fibonacci, based on support, resistance, all kinds of different factors. So, Confluence says that there is a very high likelihood that we would in fact sell back off here and come back down, and that we have to reevaluate everything. So, based on, and this is a final point before I let you guys go today, is, don't forget that market movers and market makers and whales have access to all the same things that you do, and more, because they're whales, because they have that money, they have market research, they have all kinds of things that we don't have access to as traders. Even if you're a full-time professional, you have the best software that money can buy, you still do not have access to the same resources that the whales and market movers and market makers have. So, to think that they don't have access to all this and see what people are saying and see what people are thinking and what the masses are doing, and the ability to move price to create liquidity so that they could put in a massive dump, if you honestly don't think that, then you're delusional in this market, because this is a perfect example of it. That's a perfect example of creating liquidity, creating a massive pump so that they can dump a huge position and then come back down and then accumulate all through here and get the pump back up. I mean, it's not manipulation.